Here we go. Here we go. It is 8:15 in the morning, and we are live for none other than 𝐂𝐴. On top of that, it seems incredibly likely that silver is going to break all-time highs during this speech. What a doubleheader. Crazy doubleheader. We had a stream yesterday where we covered the FOMC minutes from September. Thousands of you tuned in and thousands of you voted to have me wake up and cover this at 8:30 in the morning. So thousands of you better get your asses in here. Better get in here. We've got about 13 minutes or so until 𝐂𝐴 is live and he is speaking. He's older, so he's probably been awake for a few hours at this point. He's starting his morning routine, but maybe, oh no, I might have just closed my tab. Maybe he's putting in some trades on silver here because, wow. Let's just zoom into this for a second while we have just a minute. Silver has not traded above $49.83 an ounce in 50 years. That record set, or that all-time high set years ago. Please tell me I didn't close it. Okay, good. Thank God it didn't end the stream. Years and years and years ago, we have to zoom out to like a yearly chart to find this. This looks like a crazy altcoin, honestly, in crypto. We are now 6 cents away from an all-time high. This record set basically back in 1980 and then retested again in 2011. And you can see the last time it traded this high, it sold back off and did not reapproach until literally right now. Right now in striking range, silver at 49.80. Shut up, guy. Shut up, guy. Work for Federal Reserve. They stole our idea. This is like, what does the Fed do? They stole our video. I mean, who could blame them? We're a master at this craft. But this is absolutely wild. The implications of silver and gold running the way they are, I still haven't gotten to the bottom of what that means. Oh, right now, right here. You are witnessing history on this live stream. History being made right now in the moment. In this exact moment. There we go. Wait, did I get it? Why is that not working? In this exact moment. Either way, in this exact moment, silver hitting all-time high right here, right now. And you were here for it. You witnessed it with all of us as we waited for 𝐂𝐴 early in the morning. If you could, no, not even if you could, do it now. Hit that like button, subscribe, engage with the live stream. We have quite a bit ahead of us. 𝐂𝐴 hasn't even opened his mouth and we already have all-time highs on the charts. Record all-time highs on the charts. So engage with the live. Say hello. Say good morning. Like, subscribe, share it out with your friends. We can only imagine what volatility lies ahead in just a few minutes here. Do it now. Do it now. That's right. That's right, Jesse. How you doing? Morning, Jesse. S&P probably at all-time highs as well. But these gains are just completely eclipsed by gold and silver lately. We see all-time high on S&P, on indices, but the gains made by gold and silver are just well beyond them. They really almost beckon the question of, is the S&P even moving? Like, is it even doing anything? Because it's being outpaced by both gold and silver right now. This is a very unusual scenario. Silver pushing up to that $50 mark, a price it has never seen, except if you ever tried to probably buy it spot. You probably could have paid $50 an ounce because the spot market is a scam for metals, apparently. Bitcoin also up. I do have to say quickly while we have time, we have, I won't even say a rare L, but we do have an L. Yesterday's live streamed trade, the long here, did get stopped out. It was not a W. We've had a lot of W's lately, but yeah, we don't pretend like we never get them wrong. That one was stopped out. Bitcoin also having a little joy off of this AM morning stream. Green candles retracing a little bit of what it lost yesterday. Not quite back to where we were. 123,365 is where I'm going to be watching during the stream. Essentially where we rejected, stopped this out, set the higher low. Let's see if the bulls can push through this now resistance with the words of Powell. What else is going on in the world? Crypto ZEC Some of you still riding 𝐂. 𝐂 up at $189, $190, breaking through. Nice close. Let me see. Closed higher. Didn't quite close above 197. That's what I was looking for. But pushing higher and making it appear like it's heading for that $245 level. Your guess is as good as mine. We can see 245. I think that's a great target. 400 would be 2021's high. If you look at the greater picture of 𝐂, and not just 𝐂, but almost all the coins that existed through these cycles, they have not had a great history of breaking all-time highs or even breaking previous cycle highs, honestly. And so if 𝐂 breaks 400, that might be starting a new trend. We might see it. We might see it and others look to retest previous all-time highs and maybe even break them. That'd be great for our bags. I don't know if many of you are holding 𝐂 from back in the day, because that's a hard hold. That's a real hard hold. People really hated this coin, but sometimes those are the juiciest. I got alerts set. Let me see. Set an alert again. I'm surprised. Honestly, I'm surprised that it's still running today. I thought at least, I don't know. I thought we at least have like a little break. We'll see. We'll find out. Be careful with things like this. Of course, the shiny, flashy thing that people are looking at that are kind of euphoric over is always a dangerous bet. Just bet carefully. Bet safely. And I guess bet on gold and silver. Let's be real. Let's be real here. Gold, no all-time high yet today. Silver stealing the show. Let's look at the gold-silver ratio. Something I actually have not looked at. I've set this chart up and barely looked at it. We're just burning time. We got 7 minutes till Pals live, guys. Keep the hype going. Gold, silver. So as this moves down, silver's a higher valuation versus gold. And that makes sense when we look at this chart. We see April of 2011 and again back in December of 1980. Those were the two high peaks in silver that we looked at just minutes ago. Remember minutes ago when silver hadn't hit an all-time high in 40 years? Do you remember that? That's all behind us now. That's all in the past because it just did. These are two peaks on silver and they correlate exactly with that gold-silver ratio spiking downward. Let's see if that is, where are we at with that? Here we are. Still really high. Really a lot of room to come down, meaning a lot of silver can potentially make up a lot of ground versus gold and still be well within kind of the normalized range of this chart. You see those last hits to 50 brought this way out of way away from all the moving averages, from all the norms. This is really honestly still kind of high. That could suggest that silver has a ton more room to run. It could also suggest, though I think this is not quite as good of a bet, that gold does not have any more to run, and that silver may just look to make a modest move. I think that's the worst bet. I think gold is still moving. I think gold is hitting 5,000 before the end of the year. Silver, little silver targets here. Let's put this on logarithmic because it's, I mean, if it's behaving like a crypto, you got to put it on the log chart. 100 is a solid bet, but that's just like a double. It's kind of a boring target. There we go. Breaking 49 is about to trade to 50 for the first time ever. That is some spicy. There it is. You just witnessed history again. That's what we do. We witness history here together. Using really simple analysis here. Measured move. Looking at like 213. That, we don't have enough time for me really to get into this, but we could extrapolate out. We could see kind of the price that silver would hit if gold didn't move. Basically the gold-silver pair. And we could kind of imagine up some numbers from that. Maybe we'll do that after Powell speaks. Do that after. Yeah, that's a good idea. We've got 5 minutes. I see the chat going. I see the chat moving. Let me bring my attention over there. I just actually am nerding out on this really quick. Let's see. Just back to this trend line. Just really quick. 50% gain. 50% gain against gold. So, we can see silver at 100 and gold not move. That could be interesting. We can see gold move to 1,000 or move to 5,000, and then silver would be if that moves up like 25%. Probably around here. That would be interesting. That would be actually hella interesting. If gold hits 5,000 and silver corrects or moves back to that trend, $122 silver. Oof. Are we getting euphoric on silver, boys? That's okay. We deserve it. We've had like no euphoria. We get to just enjoy this sometimes, right? Let me enjoy my life, world. Jeez. There we go. Minutes to go, and silver's already stealing the show. I have no gold or silver, and so I feel poor now. I feel very angry at everyone else who has gold and silver. I feel very jealous. Not really. I hope you all have gold and silver. I hope you're all killing it with this. I don't have any. That's true of a lot of things. I just have a lot. It's really just Bitcoin. I just got Bitcoin. It's not the most exciting portfolio, at least in 2025. That is. You're getting sleepy? Good morning, Coden. How are you? It's time to wake up. It's time to lock in. We have historic moves already on the live stream. We've been live not even 15 minutes, and we already have a historic move captured on the live. This is incredible. And we have really bad elevator music playing from the Fed that'll probably, for some reason, get us like copyright strikes. That's wild. Where do you guys think silver's going? Who has gold? You know what? I'm going to ask in the chat. Do you hold gold or silver? Yes, both. Gold. Incoming poll. Get ready to vote. Neither with a frowny. I will vote with the neithers. The neithers have it. There you go. Do you hold gold or silver? I want to get like a little poll here. So, fun fact for some people, some lure, some canon about crypto. For those of you maybe who are newer, maybe they're around like 4 years. So, gold and silver people, or bugs, right? Gold bugs and Bitcoiners used to be the same. We used to be the same camp. Used to be really almost synonyms. People who were into Bitcoin were also into gold. People who were into gold were all sometimes in Bitcoin. Even as early as like, I don't know, 8 years ago. I'm sure this goes back farther. I wasn't in crypto in 2009, but I'm sure that goes back all the way to like the cypherpunks. We used to be in the same camp, and we used to be boys, and we used to drink beers on the weekends with each other and talk about the fiat system collapsing. And then one evil person came in and abused our friendship and made us turn on each other. And you all know who that person is out there. I'm sure almost everyone in this chat knows who that is. That would be Peter Schiff. I swear to God, this sounds like a joke, but Bitcoiners and gold people used to be the same. We used to be the best of buds. And then literally Peter Schiff came in and he used us as marketing, and he literally divided us. He made it almost appear like you can't like both, or like, which makes no sense. But yeah, his business thrived, his socials exploded, and that's history. You can all thank Peter Schiff. It literally was Peter Schiff, though. Does Peter Schiff like silver, though? I never see him talk about silver. What's up, Denim? What's up, Matt Graham? By the way, GM Chris Pax, good to see you, my friend. Powell coming on in here. He's usually a little late. Let me test the audios. I hear nothing so far. There's no audio feed yet. Community Bank.
And welcome to the Federal Reserve.
Forward. You're welcome.
My name is Amanda Roberts, and I am a member of the Community Bank Supervision Team, as well as one of the conference organizers. Before we get started, I have to briefly go over some housekeeping items. So the first thing, probably most importantly, is if you haven't found them already, the bathrooms are down the hall and to the right.
I was just about to ask. Thank you.
Please silence your cell phones.
It's right there.
Third, this is a reminder that today's event is being live streamed on the board's YouTube channel. If you ask a question during Q&A, please wait for a microphone and identify yourself. Lastly, as I'm sure you've already discovered, the Federal Reserve is a secure facility. We ask that you please keep your security name tag on all day long, with, of course, the exception of panelists up on stage. You can take it off for that. If you need to step out of the building, or you need a quiet place for a phone call, or you have any other questions, please see one of the board employees sitting right outside the door here at the desk. We are now going to begin our conference with welcoming remarks from the Chair of the Federal Reserve, Jerome Powell.
Let's give it up for Mr. Powell.
Good morning and welcome to the Federal Reserve Board. I'm sorry that I'm traveling today and could not be with you. Thank you to Vice Chair for Supervision, Mickey Bowman, for hosting this conference. Thank you also to all the board staff that made this event possible. Community banks play a vital role in the U.S. financial system because they have strong links to the people and businesses they serve and direct knowledge of local economic conditions. These close ties allow community bankers to better understand their customers and the ensuing products and services for those they serve. I saw this clearly when I led the board's Community and Regional Banks Subcommittee as a governor. I have also seen the critical role of community banks in the communities where I've lived, including as a community bank customer. Today's event is a helpful opportunity for Fed leaders to hear from community bankers and learn more about the issues you face. We are committed to understanding these issues, and we have long been committed to tailoring our supervisory practices as appropriate for community banks to reduce unnecessary burden, while still ensuring that community banks continue to operate in a safe and sound manner. Thank you so much for being here today to share your knowledge and experience, and thanks for being such a vital part of the communities that you serve.
Wow. We got rugged. We got rugged. He didn't even say anything. It was pre-recorded. He didn't even say anything.
Thank you to Chair Powell for opening our conference.
Yeah, no,
this
thank
morning.
you, Chair
It's so
Powell.
wonderful to see all of you here in Washington.
I, for once, am actually a little let down by Chair Powell. I know. A lot of you are let down by him often, but I'm not. I am almost always not let down by him. That was lame. That was lame. The reason, guys, so let's dissect that. A lot of you were saying AI. Well, I mean, of course, AI is always the logical move here, but I'm a bit of an expert on AI when it comes to identifying it. This is not AI. You can tell. You can tell due to the realistic look. This is actually just a high definition camera. He's not wearing makeup. He's usually wearing stage makeup at the FOMCs. I don't know if you guys realize that. You can tell this isn't AI, mostly because of the high resolution of the shot. But if you look at his hair isn't doesn't have any. If you look at Sora, hair will be very fuzzy and low res. You'll also see that often with the details in the background, the textures. That's not apparent. This is a real video of him. It was just really lame. Wow. I got up at 8:30 for this. Chair Powell.
Federal Reserve Board.
Shame on you.
So many of our
Are they going to say something
CEOs,
else interesting, maybe?
Community bank CEOs. I want to start by thanking our bankers for the essential work that you do every day. Serving your communities, supporting small businesses and families, and keeping local economies strong and growing. Today's event provides us an opportunity to come together to discuss the future of community banking. This great nation hosts the largest and most efficient financial system in the world, efficient and effective financial system in the world, ensuring that capital flows to those who need it and can put it to productive use.
That's not AI. Guarantee you. You want to watch it again? I guarantee you.
The U.S. financial system, because they have strong links to the people and businesses they serve and direct knowledge of local economic conditions. These close ties allow community bankers to better understand their customers and the ensuing products and services for those they serve. I saw this clearly when I led the board's Community and Regional Banks Subcommittee as a governor conditions. Thank you to Vice Chair for Supervision, Mickey Bowman, for hosting this conference. Thank you also to all the board staff that made this event possible. Community banks play a vital role in the U.S. financial system because they have strong links to the people and businesses they serve and direct knowledge of local economic conditions. These close ties allow community bankers to better understand their customers and the ensuing products and services for those they serve.
Also, let's be real. Chair Powell almost always sounds like AI anyway. You ever hear the guy say the word live or live? Lived. A short-lived inflation. Oh my God. That was a bummer. I apologize. I apologize on behalf of Powell. He said he's traveling.
Consumer digital platforms from Robinhood CEO Vlad Tenev. These leaders will help us think
The
more
lips are a little
broadly
bit out of sync.
about how
I thought
economic
maybe that was
and
me.
industry developments intersect with community banking.
Let's catch up.
Another special guest joining us today is CNBC host Jim Cramer, who will moderate a panel of experienced community bank CEOs with a combined
Jim Cramer?
century of banking leadership.
Jim Cramer's
Today,
coming?
we will showcase how community bankers have consistently adapted, innovated, and outperformed while staying true to their mission. These efforts don't necessarily make the headlines on the front page of the business section, but they should. And there's no one better to help elevate the community bank narrative and
Okay, there we go.
amplify the value community banks bring to America's economy than CNBC's Jim Cramer.
All right.
Finally,
okay,
we will host a traditional
okay.
policy
Bring you Jim
panel
Cramer,
that
all right.
features community bank CEOs discussing capital and liquidity regulation.
What about Bitcoins?
This session will provide an opportunity for a thoughtful, candid discussion
Robbie?
about how our regulatory frameworks affect your institutions and your ability to serve your communities.
Just let me get rugged live.
These conversations are
Lived.
essential to help shape our thinking and inform how we as regulators can ensure that our supervisory and
What
our
if Kramer's
regulatory
also
policies
recorded?
are effective, fair, and balanced.
Here we go.
The goal
Heading
and
back to
theme running
resistance.
through all of today's panels is clear. There is tremendous support from the public and the private sector for a strong, resilient, thriving community banking industry. Each of our sessions today reflects a shared belief in the importance of community banks to America's economic future. Thank you for being here with us today, both in person and virtually. So now I would like to thank our Treasury Secretary, Scott Bessent, for taking time from his busy schedule to join us here today to discuss community banking. And I'll invite you to share your insights with us now. So thank you, Mr. Secretary.
Thank you, Mr. Secretary. Isn't this the guy Trump said he was going to make the next Chair Powell? This could be Chair Powell next year.
Good morning. It's an honor to be with you today.
All right.
Unfortunately, the government is still shut down because members of the Senate refused to
Oh, here we
support the
go.
Clean Government
Here we
Funding Bill,
go. Here
which
we
was passed by the House weeks ago.
Here we go.
Across the Trump administration, we are eager to get the government reopened so agencies can continue to work for the
Here we
American
go.
people.
Let's get the
Glad
fingers
to
out.
see all of you were able to continue
your fault.
your work today. This morning, I wish to focus on how we can better serve the American people
Good morning.
and the
Good
important role community banks play in that effort.
All right, we're going to
To
keep this
begin,
up.
I'd like to express my appreciation to Vice Chair Bowman for arranging this conference. She and I are committed to protecting the role of community banks in our financial system.
I
This
disagree with that.
conference is a testament to that commitment.
I don't think you
As
should.
you all know, better than most, regulation has gradually suffocated the banks that are closest to the men and women who work the jobs, pay the bills, and
Bitcoin's
take out the
down.
loans that fuel growth in small-town America. Banks that not only know their customers by name, but also their
KYC.
financial hopes and dreams. In other words, banks like yours. To reverse course, earlier this year, I called for a fundamental reset of financial regulation. No longer will regulation serve to entrench big banks and empower Washington bureaucrats to the detriment of community banks and the clients they serve. President Trump and this administration have charted a new course for our economy, one that strengthens both the shop floor and the trading floor. This is what I call the era of parallel prosperity, where Main Street and Wall Street grow together. Who will turn this vision into reality? The men and women in this room.
No, I will.
Community bankers are laying the foundation for America's golden age, one loan, one family, and one small business at a time.
Are we in the golden age?
My job as Treasury Secretary is to make it easier for you to do your job. To that end, we have worked hard for the first 8 months of this administration to empower community banks to take back control of their own future. This morning, I will discuss why the Trump administration has sought to empower community banks, how we have done it, and where we will go from here. First, why? Community banks are essential to America's heartland. They provide the capital that binds small towns together. Community banks make the charitable contribution for the new playground. They make the loans for small businesses, farmers, and first-time homebuyers. They employ local leaders and teach financial literacy in our schools. Parallel prosperity, as I mentioned before, is the idea that Main Street and Wall Street can grow together, and community banks play an instrumental role in driving growth on the Main Street side of the ledger. To expand opportunities for all Americans, the banks that serve Main Street must have the same chance to succeed as the banks that serve Wall Street. But the post-crisis regulatory framework has instead become a threat to the community bank model.
It is pumping.
Since 2010, we've lost 3,600 community banks, a reduction of over 45%. Community bank share of bank assets have fallen from 23% to 15%. Their share of outstanding bank loans has fallen from 27% to 20%. Their share of outstanding bank CRE loans has fallen from 52% to 41%. This represents an acceleration of trends that predate the 2008 financial crisis. And in a disturbing new development, de novo chartering has dropped precipitously, averaging just 6 new banks per year since 2010. For comparison, in the years prior to 2008, there were 100+ new banks chartered each year. The post-crisis framework has left a trail of destruction in its wake by reinforcing the larger economic dynamics that have hollowed out the American heartland while enriching the money centers in coastal cities. To be clear, the financial crisis underscored the need for new regulations. The purpose of Dodd-Frank was to end too big to fail, but it ended up creating too small to succeed. These new regulations entrench the dominance of the largest banks by rewarding economies of scale and necessitating effective lobbying operations here in Washington. What followed was a community bank bottleneck that left America's hometowns reeling. President Trump and this administration have seen what the heavy hand of government has done to community banks and the families you all serve, and he has set out to fix it. Why? Because we know
Let him fail.
that the Main Street revival starts with a community bank comeback. How will we position community banks to succeed? Let's start with the early wins. Just days after President Trump was sworn into office, the administration began rolling back the regulatory excesses of the Biden years. The regulators ended the politicized use of reputation risk and supervision. They proposed to rescind an embarrassing, complicated 60,000-word Community Reinvestment Act rule, and they retracted a merger policy statement that was both bad policy and bad law. The previous administration pushed for rules and guidance that micromanaged corporate governance, entangled the bank regulators in climate risk management, unduly restricted brokered deposits, precluded responsible bank innovation in crypto and other blockchain technologies, and imposed arbitrary restrictions on incentive compensation. These Biden-era proposals were bad for banks, bad for business, and bad for America, especially Main Street. So President Trump slashed all of them. To restore the strength of community banks, the new administration has replaced this draconian agenda with a new, more constructive agenda. The FDIC, for example, has recommitted to tailoring by proposing to raise and index asset thresholds. It has streamlined examination procedures and branch applications.
Yes, I need
it
to
has
know who to
started work
blame.
to reestablish a supervisory appeals body. Not to be outdone, the OCC has implemented its own reforms. Controller Gould has been on the job for only 12 weeks, but he has already reduced assessments on small banks by 30%, reversed the plan to merge community bank supervision into large bank supervision, and replaced community banks' formulaic examination schedules with a more risk-based approach. Vice Chair Bowman, meanwhile, has long advocated for revisiting the community bank leverage ratio. I expect that effort will soon culminate in a proposed reduction in the community bank leverage ratio. The CFPB, for its part, has started to revamp the Section 1071 reporting requirements and reconsider the open banking rule. And it has withdrawn more than 60 interpretive rules and other guidance documents. Following the administration's example, Congress has also taken up the effort. It has nullified the CFPB's overdraft rule and prohibited the furnishing of mortgage-related trigger leads. The House Financial Service Committee has likewise advanced 24 important reforms to community bank regulation, while the Senate Banking Committee held a hearing and hopefully will soon mark up an expansion of FDIC insurance on non-interest-bearing transaction accounts. There is still much to look forward to on the regulatory front. This includes 2 new proposals that will reset the culture of supervision. 2 days ago, the FDIC and the OCC proposed a rule that would codify the recently adopted prohibition on using reputation risk as a basis for supervisory criticism. The FDIC and the OCC also proposed a rule that would define unsafe or unsound practice or condition. While simply defining a term might sound like a small thing, it marks a big step forward. Only in the world of unaccountable regulators could a key concept have gone unidentified for so long. The past failure to define this term led to supervisory criticisms focused on process or documentation related to governance, model management, and third-party risk management. In other words, topics that often had little or nothing to do with a bank's actual financial condition. This regulatory myopia was the driving force behind the spring of 2023 bank failures. Once finalized, a clear focus on material financial risk will put an end to this nonsense. I'm also optimistic about AML-CFT reform. In my meetings with community bankers, they list CTR filings, structuring SARs, and process-focused examinations among their top concerns. Today, FinCEN released FAQs to address pain points on some of these issues, including triggers for restructuring SARs, continuing activity reviews, and the absence of any requirement to document a decision not to file a SAR. These are common sense, yet consequential reforms that will ease regulatory burdens without undermining law enforcement efforts. As part of our broader campaign to modernize illicit finance regulation, FinCEN and the bank regulators are hard at work on a new rule to define the requirements for an effective AML-CFT program. My expectation is that a proposal will recenter supervision where it should be, on the effectiveness of a bank's AML-CFT program. I likewise expect that proposal will position FinCEN as a gatekeeper for AML-CFT enforcement. This will be a significant departure from the past with its zero-tolerance focus on process, documentation, and wide latitude for supervisory expectations and judgments that are not always consistent with the law or our national security priorities. A focus on higher value activities will also better serve our law enforcement and national security objectives. These are all important victories, to be sure, but much work remains to be done.
Yeah.
Where do we go from here?
Yeah.
Going forward,
Economic
Treasury
spells.
will continue to drive reforms to improve regulatory tailoring, refocus the culture of supervision, and modernize our illicit finance regulation. Specific priorities will include reforms to the rating system, new processes for monitoring examiners' compliance with supervisory policy, mechanism for independent appeals of supervisory criticisms, coordination to avoid duplicative examinations by different regulators, and review of the core platform providers, including contract terms that prevent community banks from innovating for the future. For community banks to go back on the offensive, we need to take a closer look at the dynamics that have undermined the community bank model and work to fix them. To that end, as I have said before, Treasury is focused on ensuring that modernization of our capital framework ends the capital arbitrage that drives bank lending to non-banks. This will likely entail reduced capital requirements for large banks on mortgage loans, investment-grade corporate loans, and some other important exposures. We must therefore ensure parity by giving smaller banks at least the option to benefit from these reduced requirements. Treasury has also supported congressional efforts to modernize the deposit insurance framework. I'm encouraged to see emerging bipartisan support for increasing FDIC insurance limits on non-interest-bearing transaction accounts. In addition to these efforts, Treasury has taken an informed and careful approach to Fannie Mae and Freddie Mac. Any actions on the GSEs must not increase borrowing costs and must preserve what works in the current system. That includes the prohibition on volume-based discounts for large lenders, as well as the cash window and other features that preserve equal secondary market access for small lenders. Now, allow me to close with a call for action. Before President Trump took office, community banks spent decades on the defense. But under President Trump's leadership, the game has changed. The playing field will be even more even. The ball is in your hands again.
The
what
balls are
happens
in your
next
hands,
is up to
Bissett.
you. So my advice, go on the offense, retake market share, chase after customers, champion technology, leverage the new
Get those
regulatory
balls in your
landscape to your
hand.
advantage, and expand your role in the American economy. The community bank comeback will help pave the way for America's golden age. Recognize the outsized role
really boring.
you play in this effort and embrace it. Because if you lead the way, Main Street will follow. Thank you.
It's a bad bear chair. Lots of people subscribing. I refuse to clap. Lots of people subscribing, guys. Chair Powell might have rugged us. Like, honestly, he rugged us. But we do have some interesting speakers coming up. Like Jim Cramer apparently going to show up here. We didn't know that. So we got some spice still. Really, the reason I feel like we should continue this stream, even though Chair Powell rugged us, is silver just made history. Like, just broke 45-year all-time highs, and is still going. It's at $50.35 an ounce, and it's still going. Something tells me that there's going to be more interesting stuff going on today. Basant was incredibly boring. He was casting economic spells. That was the funniest comment. Well done.
Areas like where I'm from and rural communities across this country, and how important community banking is for the foundation of our economy and the economic system. So if you don't mind, we'll start with a question, and thank you for joining me for a fireside chat this morning. But as Treasury Secretary, you oversee U.S. fiscal and macroeconomic policy. So I know every banker in this room is interested to see how you think about how the economy is going to develop over the next 12 to 24 months, and what key risks and opportunities should they be thinking about and looking out for as they're thinking about how to shape their businesses going forward.
Well, I come with some good news this morning, and Treasury, because of the Schumer shutdown, will not be able to release the exact numbers, but the CBO jumped the gun a bit, and it was on Bloomberg this morning
about banks
that the deficit for this fiscal year, ending September 30th, will be slightly lower. Deficit to GDP now has a 5 in front of it. So according to the CBO numbers, and we don't have the Treasury numbers yet, the deficit to GDP will have fallen from about 6.5%, which was the highest when we weren't at war or weren't in a recession in U.S. history, to 5.9%. When I went to see President Trump approximately 2 years ago to tell him that I'd like to come out from behind my desk and get involved with the
every
campaign,
other word with him, President Trump.
Not going to repeat
you got a crush
many
on
private conversations, but this was particularly notable. He looked at me, first thing he said, Scott, how are we going to get the debt and deficits down and not cause a recession? And we're on our way. I think we saw that today. So I think the president's economic policy, as many of you would have seen me say before, is a three-legged stool. Trade, tax,
I really hope he doesn't replace Powell. I cannot deal with this guy for like a bunch of years.
The one big, beautiful bill has incentives for both
silver's at $50.50,
corporate America in terms of
57 cents.
full expensing
It's already put on
for
like almost an
plant property
entire
and
dollar
equipment,
from the all-time high.
and the
5%.
plant part is new. In the Tax Cuts and Job
Wait, not
Act
5%.
of 2017, there was
2%.
full expensing
That's a lot,
for
though.
equipment, but we have added structures for both industrial structures
You might cry.
and, importantly, agricultural structures.
You'd
So,
very much cry if Trump made fun of him.
Secondly,
You'd definitely cry.
on the other side of the ledger, it also includes the
You might like
president's
getting bullied, though.
tax policies or campaign promises for working Americans: no tax and tips,
Dude,
no
what-
tax on overtime,
what is
low
he
tax on Social
talking
Security,
about?
and
What
interest
is he actually
deductibility
talking about,
if you
bro?
buy an
This is
American
like
car.
some, I don't like
I think
banks.
one of the things that we are seeing now,
We don't like banks
most
as much as the next guy.
taxpayers
We don't
have
like
not
banks,
changed
but like
their withholding stance to reflect this.
Talk
So
about banks,
we
bro.
expect to see substantial tax refunds beginning of next year, which I think will be accrue to
dude, silver.
lower end consumers for the
Silver's
bottom
the new
50%
Bitcoin.
who need the relief. And concurrently, they will change their withholding schedule,
Wow.
so their real take-home pay will be higher next year. On the trade deals, I think one of the underreported aspects of
he's
the
like a
trade deals is
campaign trail
not
stop.
only are we taking in substantial tariff revenue for our American exporters, we have brought down
hit
non-tariff
51.
trade barriers and brought down tariffs across the board. So with many of the deals that we have gone from high tariff levels, and I
Get
tell
Kramer
you,
on.
for instance, Indonesia was very good about
We've
bringing
gone to
down their
lower
tariff levels,
tariff
but
level?
when they showed you the list of 9,000 tariffs that they
Silver to
had, you
100
couldn't
easy,
believe
yeah.
it. So,
122
and like
looks good.
President Trump said, I don't blame the Indonesians for doing
I
it. You
blame
blame the people
Bassan.
the folks who were sitting at the Resolute desk for letting it happen.
blame Bassan.
So
Bassan.
on trade, we're landing the trade deals. That will increase certainty. And then finally, on deregulation, we've talked a lot about financial deregulation, but we're also talking about
Yeah, that
energy
never
and
has- that
industrial
has never gone
deregulation.
bad.
We're trying to make it
Deregulating the banks has
easy
never gone
to
bad.
build things here
Not
again in
even
America,
once.
whether it's permitting for factories, for pipelines, for the electric grid. So I think I'm very optimistic that 2026 could be a very good year across the
nothing to do with
corporate and
the
the consumer
topics.
economy.
I guess that.
Well, thank you
okay,
for
it was
that.
all-
You've been
all
very
of
busy
those
since you
things.
got started earlier this year. So
All of those
thank
things
you
that
for
then are
sharing
just-
that, I think
and it'll be
that's a
very good for the
optimistic
economy.
view
That's
about
why
how the economy will
talking
be
about
evolving,
this.
I think in the
Okay.
relatively near future. Thinking about that,
Can we get Kramer
community
on?
banks
Can Kramer
are
get on
critical
and
in
tell us to
providing
buy
local
silver
and
so it
regional
dumps and I don't feel so much
credit,
FOMO?
throughout their communities, through small towns, through rural areas, and in underserved markets especially. So you talked a little bit about what some of the initiatives are that Treasury's been working on with the prudential regulators. Are there other areas that you'd like to focus on or to share with us today that might be helpful for bankers to know?
Well, as you said earlier, I may be one of the few, if not the only Treasury Secretary who's given this much emphasis to community banks, probably the only Treasury Secretary since the 17 or 1800s who lives, well, there wouldn't have been farm radio, but is also a farmer.
1800s.
So I remember listening
guy's a
to farm
farmer?
radio
What?
right after the Silicon Valley debacle or the three-bank debacle, and they were talking about the risks to community banks that were happening, that could be happening here. And I was just struck by what the presenter was saying. He said, the big banks, they're going to come in, they're going to buy up our banks. They don't play
Silver's
Little
hitting
League baseball
51,
with your son. They
52
don't play
today.
softball with your daughter.
What is
They
even
don't
happening?
go to your place of worship. They don't know you from the Rotary Club. What are we going to do? And so we are committed, as I said. I'd like to see us getting back to de novo banks. Again, it's a sign that when you see creation of something, it's a sign that the ecosystem's healthy. So we want to get back to de novo. We want to get back to leveling the playing field. I think these transaction accounts are very important. We try at Treasury, we try to meet with dozens of community banks, whether it's one-on-one or in groups every month.
This guy looks like he
And
smells bad.
one of the main ask that we got was increasing the non-interest-bearing transaction account. So we've been working very closely with Senator Tim Scott on that. And I think we haven't landed the exact amount yet, but I think that legislation is going to move through.
Well, it's
think
wonderful to
Silver's
hear
going
some
here, like,
progress in
today.
some of these areas that have been a topic of conversation for a number of years. So thank you for your support in working towards some solutions in that regard. Later today, we're going to have a panel of community bankers to talk about capital and liquidity regulations. So I wondered if you might be willing to share your views and thoughts about how we could appropriately calibrate those capital and liquidity levels, especially for community banks, but maybe more broadly across the banking system to be more effective for economic growth and how to support the economy going forward.
I think if we take a step back, we could see that the substantial amount of credit that is being grown outside of the regulated banking system tells you that the regulatory framework that was developed post-Dodd-Frank is too tight, and that there is this substantial arbitrage to be done, whether it's vis-a-vis big banks, whether it's small banks. Why do we have private credit that is bundling loans and then receiving lines of credit from banks? Let's get back to the primary lending function. Let's make capital more risk-based. Let's understand that there's a lot of work to do in terms of bringing this back down to common sense levels. In terms of knowing your client, in terms of releasing what I would say is this regulatory straitjacket. And famous last
Now
words,
he's talking about stuff.
I think private credit is a dynamic new aspect that increases the depth and breadth of the U.S. financial system, but it can't be to the detriment of the regulated system, because my real worry with private credit is everyone in this room, all the bankers, and look, I met a lot of banks who've been going since the 1800s. And if you've been going since the 1800s, you know a lot about risk management. You know how capital works. You know how your clients are. My worry with private credit is it could be very pro-cyclical, that without stable deposits, in terms of if there were a downturn, the way Treasury and Federal Reserve would work together would be with window guidance, would be with regulatory lessening the regulatory parameters, and to restart the economy in a counter-cyclical basis. So we also want to look at that. And again, too, a lot of the things we want to do, we want to make it easier to operate. We had a small community bank from South Carolina a couple weeks ago in one of our panels. I think it was 185 million of assets, 17 employees. I think 5 were for compliance. So, and no one is more focused right now on financial crimes. Our FinCEN department is 24/7 in terms of what we are trying to work on, but we're also trying to add a common sense layer. Can we do geographic targeting? If we see that a huge amount of the narco finance is along the border, should we lower SARs there and raise them everywhere else to avoid all this regulatory expense?
Well, I think that's a very important topic for many community bankers as they think about some of the regulatory burden and requirements that they're not sure what happens to once they send it forward. One thing I want to just pull a thread on is you mentioned the importance of ensuring that we have the ability as regulators and bankers are not disincentivized from participating in different types of activities. One thing I would point to, and I have many times over the years, is to talk about how important it is that we're pulling some of these activities back into the regulated financial system, especially real estate lending and mortgage servicing and things of that nature. So I know many of these bankers in the room are hopeful that we'll be able to think about that differently. So when you discuss the regulatory perimeter, I think that's a very positive path for discussion, and we'll look forward to engaging on that.
And look, I mean, no one knows when you talk about real estate, no one knows the real estate landscape like local bankers.
Absolutely.
Maybe there's some banks around the Ozarks who like lending down in Florida, but I hope they're successful. But I will tell you that community banks. I'm sure all of you read all the news reports. Oh, community banks hold all the small community banks. It's going to be a debacle. They hold all these CRE loans. And for 15 or 20 years, initial 15 or 20 years of my career, I was a banks and insurance analyst. So I know how banks work. I may seem exciting, but I used to read state insurance call reports.
Those are fascinating.
Gripping is the only word. But I could tell you that to the extent I was successful was being fact-based and not narrative-based. And as we dug down on what was supposed to be a CRE wipeout for community banks, it turned out that they really weren't CRE loans, that they were business loans. And we just went out and talked to small and community bankers. They were business loans where the business person put up their building as collateral. So you didn't have a loan on a part of a strip mall. You didn't have a loan on a pod. It was an accounting firm that was financed. You had a loan to an accounting firm. You had a loan to a law firm. You had a loan to a medical practice. So, and only community banks know that.
Well, it's refreshing, again, to hear the Treasury Secretary talk about community banking in a way that helps us recognize that you do have a background in it and that you're serious about the words that you're saying in support of community banking. So thank you for your commitment to that and for sharing that with everyone here today. One thing everybody's a little bit concerned about going forward is the shift in the technological landscape. And banks for a long time have been innovating. It's been a hallmark of the community banking framework in their survival since the 1800s, which I have to say thank you for mentioning banks that were founded in the 1800s, because my family's bank was chartered in 1882. So that's a little peace of mind here that you think that they understand their risks. So I'll have to share that with my cousin. But on innovation, banks have been partnering with fintechs for a number of years now, and we continue to add more and more requirements about third-party risk management, and oftentimes they don't make sense, or they conflict with each other, or they contradict what the requirements are. As we're thinking about how the landscape with technology, with AI, with stable coins and other types of new business services and activities are being brought forward through the sponsorship of legislation and new regulatory frameworks for stablecoins and things like that. Today we have the Robinhood CEO and also the Paxos CEO to share their views on how community banks can engage or think about how that will look going forward. But how do you see the role of technology evolving in the banking sector, and what policy levers do you think that we could use to help ensure that community banks can compete effectively in the new technology environment?
I think it was very important. If I look, one of the biggest regulatory changes from the Biden administration to the Trump administration, there have been a lot of them, is our emphasis on AI and digital assets. AI in the Biden administration was governed by diffusion. They were going to treat it somewhat like the nuclear program, keep it in a box. They were going to hand it to Google, Microsoft, Meta, now, and that was life.
Sky's the limit.
On the other side, digital assets had a near extinction event with Wells notices going out to many companies. banks prohibited from opening accounts. And I think the fact that we're creating, the term is sandbox, where there's a lot of experimentation, where there are a lot more offerings, and for community banks not to be locked in that they have to use like one of 3 dominant service providers, that for a wider range, supply will push down price, choice will inform. Community bankers are, and the owners, whether they're family-owned banks, whether the shareholders are usually in the vicinity, and I think that they will be laser-focused on the new technologies. And just like with the credit card companies, I think that new payment rails will exist, and I think we have to make sure that it's open for everybody. JP Morgan, Bank of America may have their own stable coin, but I think it's very easy, and you'll hear, you have 2 great participants, that you will hear that for community bankers to join together, whether it's in some kind of a cooperative program, whether, but you can private label these under your own name, and it doesn't necessarily have to increase deposit beta. The other thing we're going to do, because we value community banks, we are going to make sure that any new regulation is done in a safe, sound, and not abrupt manner. That there will be a transition, and everyone will be able to understand it and participate in it.
Great. Well, I think that's wonderful news for all of our CEOs in the room and everyone listening virtually. I think it's important, as you said, that all banks can participate in this new economic environment, and that we're creating a framework that will allow for safe and sound engagement, as well as ensuring that whatever customers are interested in doing, that banks have that opportunity through a sandbox. That's an excellent idea, and it's great to go back to those ideas from the first Trump administration, where we were actively engaging with office hours, where we would bring in fintechs and bankers to talk about how they wanted to expand businesses in a way that was appropriate and met our expectations.
And I also think too, how many people in this room's first savings account was a Christmas club at the local bank? Right.
I have no idea what.
Are we going to develop the new kind of crypto Christmas club? I like that.
Well, that's an interesting idea, yeah.
CCC Crypto Christmas Club. and because I do think one of the great things about crypto is it's bringing young people into the markets, into
that's true.
the financial industry, and I think that community banks will be at the front line of providing that. You have a natural advantage in terms of going into the schools, in terms of financial education, in terms of financial literacy. I think Mickey's heard me tell the story. My deep, dark secret is that, and a lot of people from South Carolina have it. I have a Dr. Pepper every morning for breakfast. I'm not allowed to do it at home, so which used to take me to the Circle K on Meeting Street in Charleston, South Carolina. And in there'd be a lot of young construction workers getting ready to go to work. They'd see me dressed like this, and they'd be playing the lottery. I'd say, "Mister, when I win the lottery, will you manage my money?" I said, "Well, the first thing you can do is not play the lottery." But imagine if that group,
I don't like this guy. If he replaces Powell,
involved in digital assets, if they've been putting that $20 of their hard-earned money from construction work, from their blue-collar jobs into digital assets over this time, and it's going to be community banks that do it. It's not going to be the big national banks. So, I think that to be able to cater to that audience is going to really provide opportunity for a lot of growth.
Well, I got to say that my theory has always been you can't win if you don't play. So, whatever venue that is, I look forward to seeing how all of those things evolve over the next 10, 20 years, maybe even sooner. But before I ask you the last question about the future of community banking, I want to just touch on some of the legislative proposals that are being considered. There's a big groundswell of discussion about asset thresholds, potentially changing when and how certain regulatory requirements will apply to community banks and other banks of other sizes, including regional banks. How's Treasury thinking about those proposals, and what principles should guide those thresholds as legislators and as regulators are thinking about those going forward?
The first 20 words.
Well, I think we should think about it in two ways. One, we always think about it inflation adjustments, whether it's for Social Security, sometimes for capital gains.
We never consider inflation adjustments.
There's probably
Literally.
a big catch-up
Look
to
at
do
the minimum wage.
in terms of asset thresholds. Just the economy's grown.
Massive catch-up.
The asset size has grown for bank lending, and like I said, we want to bring it back into the regulated system. So I think that it will be natural to raise many of these thresholds. But then I think you also have to look at what's your book of business, that how risky in terms of how have you grown your balance sheet. Does it look like something like Silicon Valley Bank, that with a lot of deposit beta? So I think it's those two, but I definitely believe that we do need a substantial increase in terms of the regulatory levels, and maybe even an increase from the $10 billion. When does the Fed get involved?
I think those are really great topics of conversation. And I think more and more I'm having discussions, as I'm sure you are too, with regional banks who are being frozen at a certain asset level size so that they're not crossing that $100 billion threshold, or a community banker that's being frozen just below $10 billion in assets, simply because so many different thresholds of many kinds and different regulations and statutes bite.
Or one of the banks we had come in, and you would think that if a long-standing big customer came in and put a big deposit in at the end of the year, you'd be excited, but they would, no, we can't take it because it's going to push us over 500 million,
right.
And then the trigger there. So we want to make sure that you're able to grow without setting off these regulatory tripwires.
Well, I look forward to chatting with you about that going forward, and seeing how all of us as in the regulatory space can think about how we can more effectively allow banks to manage for their growth and their size, especially when they're not changing their business model. But finally, on the topic of the future of community banking, over the next 5 to 10 years, how do you see the biggest structural shifts occurring, and how do you think community banks will evolve to meet those challenges in the future? One of the questions that we're asking all of our keynote speakers today is, what does the community bank of 2025 look like?
2025 or 2035?
Oh, sorry, 2035, sorry. I don't have my glasses on. Yes, 2035. It is already 2025.
That is the correct date, yes.
The ones that make it through the next 10 years will have embraced technology, have embraced financial modernization, and as I said earlier, I think we'll have brought along a whole new generation of young people into the financial world. Because look, there's a whole group just because of
young people don't have any money. I don't know how they're going to get in the financial world.
And they lived through the
You
GFC.
need money for that, remember.
They lived through COVID. But when I interact with them, they're curious. They want to be part of the system, and it will have been that. And I think that we will see I don't know if the branch model is as big as it was. We'll see with that, but I think it's all going to center around technology. And so that's the importance of low-cost technological alternatives for the next 10 years.
Not just for 2025.
Not just for 2025. Oh,
Yeah, I think one of the wonderful experiences that we've seen over the past throughout COVID and the Paycheck
George,
Protection
what's up,
Program
brother?
was that we have.
These people aren't saying anything interesting anyway. They've been talking about the future of community banking for the entire time they've been talking. And now they're like, final question, what's the future of community banking? George, what's up, brother? Cryptosaurus in the house. Your Clash coin, man, and people are asking about it all day, every day. You got to give us the scoop.
For their small businesses to keep their economies running and people employed. But I think it's a wonderful recognition of everything that community banks have done over the past at least 5 years to keep our economy running, to keep our people employed in rural communities and in urban communities as well. But thank you for the support that you've provided.
Yeah, and I think that the other big opportunity is going to be what I saw in the local market in Charleston, South Carolina, was when Boeing came in. Boeing doesn't need, other than people in this building, they don't need to bank with anyone in this room. But when Boeing's second largest production facility came in, there was an ecosystem of more than 200 small factories that sprung up. And the small and community banks, some of the small regionals, all moved into Charleston, and they bank every one of those small factories. Some of the factories, some of these startup businesses that have 50, 100, 200 employees. So with this administration's effort to bring manufacturing back to the U.S., I would say when we see, we're talking about bringing back the semiconductor industry, they need 500 companies around them to do that. When we see this precision manufacturing, when you see a multinational company set up, they are going to need a big ecosystem. And the ecosystem, JP Morgan's not interested in the ecosystem, and I think everybody in this room should be.
That's wonderful. Thank you so much for sharing your perspective with us and celebrating the agility and flexibility of community banks to solve problems and to meet needs where they arise quickly. And we look forward to the rest of our day today, and we really appreciate your time this morning. Thank you, Secretary Bessent.
Thank you.
Yes, thank God. If he's the next Fed chair, I'm quitting life. I can't listen to him every month, twice a month. I mean, Powell himself is boring as hell, too. They're taking a 20-minute intercept. Wow, 20 minutes? We got rugged. You guys want to see Powell again? We got rugged. This was rare. I assumed if he was going to rug, he was going to call me and let me know, but he didn't. Watch this.
We're now going to begin our conference with welcoming remarks from the Chair of the Federal Reserve, Jerome Powell.
Good morning and welcome to the Federal Reserve Board. I'm sorry that I'm traveling today and could not be with you. Thank you to Vice Chair for Supervision, Mickey Bowman, for hosting this conference. Thank you also to all the board staff that made this event possible. Community banks play a vital role in the U.S. financial system because they have strong links to the people and businesses they serve and direct knowledge of local economic conditions. These close ties allow community bankers to better understand their customers and the ensuing products and services for those they serve. I saw this clearly when I led the board's Community and Regional Banks Subcommittee as a governor. I have also seen the critical role of community banks in the communities where I've lived, including as a community bank customer. Today's event is a helpful opportunity for Fed leaders to hear from community bankers and learn more about the issues you face. We're committed to understanding these issues, and we have long been committed to tailoring our supervisory practices as appropriate for community banks to reduce unnecessary burden, while still ensuring that community banks continue to operate in a safe and sound manner. Thank you so much for being here today to share your knowledge and experience, and thanks for being such a vital part of the communities that you serve.
All right, what is AI or not? People think it's AI. That was the replay, yes, Stone. That was the replay. We almost had 2,000. Oh, wait, let me get Hold up. There we go. We almost had 2,000 votes. Hell yeah. Hell yeah. Almost 2,000 votes on do you hold gold or silver? About half of us neither. I'm in that camp. I feel you. That was the pre-recorded Rug Powell that we got this morning. A bunch of people are saying AI. I don't think it is. I don't think it is based on, I have watched a lot of these AI. I've studied different techniques of identifying a video is or isn't AI. And of course that's an arms race, right? It's always evolving. But there's a bunch of things here that do not look AI to me. The way he spoke, sure. I mean, like, yeah, but oftentimes, man, the guy is a weird speaker. You ever hear him say the word lived or live? Short-lived inflation is kind of a weird speaker. This is honestly, I just think he's not wearing makeup. I think he always wears makeup when we see him. He's old. The hair, I mean, go watch the video yourselves, right? Dissect it. I don't think it's AI. If it is AI, that has strange implications, doesn't it? Like, is he okay? Is he in the hospital? Right? Like, I don't know. Playback. Speed. Let's go. Hyperspeed. There we go. I guess they're taking a break until 9:45. It seems like an egregious break for doing literally nothing. Like, nothing just happened there. Besant spoke for, like, I don't know, an eternity. But that nothing was said. Nothing really happened. We have some really good speakers that I didn't even know were going to be speaking. Jim Cramer. Going to be moderating a panel here at I don't know, I guess it could be at 9:45. Do we have more information? Let's open up the more information. Let's dig in here. Okay, remarks by Secretary Bracent. Fireside chat. Payments innovation community banks fireside chat. Paxos CEO. Interesting. So this is kind of like this stuff that's cool. We have like crypto people. Paxos, that's PaxG, the tokenized gold. I don't know what Vantage Bank is. Moderator Jim Cramer's on at 10:45 with a bunch of banksters. I don't know. Who else? That seems to be the highlight. We probably would have just already abandoned this concept after we got rugged by Powell if silver hadn't literally made history while we were live. Literal history in the making. This is something that has, honestly, when I started streaming or even trading, I probably never would have thought that this would happen, right? Like this is not something that seemed very likely until very recently. Silver has broken all-time high while we were live. Maybe it was destiny that we got up this early. Basically traded to $49 in 1980, again in 2011. And then this morning, it broke to $51. Absolutely crazy. We have some estimates of where I think this is going to go. But what I was saying is, yeah, that's pretty much why we stayed live, is silver making history. This is wild. Like, this is 45 years ago. Silver traded at this level. And then traded all the way down like a shitcoin. Traded all the way down. 93% down to $3 an ounce before making its very slow, glorious reascent. But silver already traded to 51. This may not happen overnight, though. That was very crazy. And we did see gold break out over the last year and then just continue up, right? It stopped behaving like gold. We actually said that we kind of thought that would happen. We even said that this is the likely scenario. Gold broke a crazy, where is this? Gold broke a similar, I'll say chart-ish thing, okay? Not quite the same, but it's similar. I'll show you quick. Gold broke a very long-standing, all the way back to 1980, the exact same year as silver, actually. It's at the all-time high. Trend line that connected to 2011, and that brought us all the way here. Last year, at the end of the year, say September, October, we're talking about gold breaking this trend line, and if it does, it may go parabolic, and that's exactly what it did. It went completely parabolic. It began behaving more like crypto than a metal, precious metal. Gold has put on $10 trillion in market cap since the start of this year. Silver's doing something similar. Now, it obviously is not exactly the same. This is a horizontal. This is just a number. This is 49 something. It's not a trend line. It's not the exact same thing. That would be dishonest to say it's the exact same thing. But I think you can genuinely say that silver has now done something that is almost that is like the closest thing you can say it's done. I don't know, to what gold did, and maybe it will now behave differently. We'll have to see a close above. We're still kind of teetering here. Look at that. Look at the precision of that freaking hourly candle. The hour closed on that trend line. See closes above there, and maybe silver will go parabolic. Maybe it'll begin trading like crypto, the same gold did. Now, we had some estimates on where we think we could see this. I'm not even going to put a timeline on it. But I am liking, obviously $100 is a great target. The all-time high is 50. 100 is a doubling. It's a nice psychological number. $100, if I was in a position, is certainly not a bad place to look to lock something in, right? But I really like 122. Yes, turn off my alarm. I really like 122. And so there's more to this than simply the fib tool, though the fib tool is a large part of this. The 1618 extension. Hold up, I want to throw this on the chart too. From your 2011 high to your 2020 low, sits right at $122. That's solid, but that's not enough, I'd say. Or at least there's something that kind of supports this better. I'm looking for gold to move to 5,000. If gold moves to 5,000, which still by the end of the year looks pretty likely, and the gold to silver ratio, come over here to the gold silver, you will find on the gold silver ratio that in 1980 silver hit its highest valuation against gold. The second highest valuation against gold was in 2011. Those are on exactly those spikes that we saw on the silver chart. If we see this ratio return to that trend line, it will give us roughly, if gold is at 5,000, it will give us roughly that $122 mark. I think that's pretty good. I think that's pretty solid. Maybe you should cement this math more. Later. 42 times 2. Yeah, gives us like 5100. Hey, my mental math's pretty good. That is like why I'm looking at it. The extension is good. I think that ratio lining up is better. They might happen at the same time. We'll see. But that's why we stayed live, essentially. This has been very much a nothing burger. There's really... we did learn, though, that God help us if Bessent becomes the Fed chair. It is going to be a rough FOMC few years for us. Rough FOMC years. That I can say. That I can say. We got some good stuff here. What else can we ponder here? We had a bunch of new subscribers. If you're out there and you haven't subscribed yet, join the fam. Just hit that button, join us. 2,000 votes on that poll. That's a good poll. Even at 4K, at 53 days, I was like 93. Yeah, I mean, we watched this happen. This is like why I'm confident on this. And usually, confidence in charting is a recipe for disaster. We plotted this out. We saw this happen. We talked about this before it happened. We talked about gold breaking this trend, this 40 whatever year trend, 50 year trend, and said, and we literally said, we can go back and find it, that if it happens, it is likely to just go parabolic. And I remember, you can find this quote somewhere in our long history of this channel saying that gold will behave differently, that it will behave more like crypto. That was a crazy call at the time. It has aged really well. I feel confident in this because gold is already showing us the way here. Silver has been lagging. Now silver is seemingly catching up. I mean, silver obviously trying to catch up here. I have too many charts. And this move today has been wild. And what is this move even off of, right? Was there anything? It was anything. It was just a typical Thursday, silver all-time high. Powell was live, but we got rugged. He was never even live. Gold and silver, BNB, Imperial. I mean, BNB is doing hella well. Do you guys? We plotted this out. 1,300 to 1,000. Do we think we get the pullback? It's hard to tell. It's hard to know. It's pretty much just like a crapshoot at this point. I think 1,500 is where I will begin taking profit on BNB. Maybe I'll sell half my stack. We'll see. Ooh, we just hit 189,500 subscribers right here in real time. What a beautiful, clean number. Check that out. I want to thank everybody who had a part in that today. Like Hone Lee Ba, Adrian, you, Henry, Ratnarong, Edgar, YK, Jamie, Human Being Liz, Brian, Feli, Alberto, Jason, Narcus, Darvin, Ratish, Oli, Jerry. Dude, we've had so many names. So many names. Keep them coming. What's up? NMCT, Super Chat $5. Your 3X. Let me see. Your 3X. Silver Bull ETF AGQ is your only 100% return stock this year. Nice. Congrats, brother. If you bought like a leveraged silver this year, wow. Well done. Earlier in the year you bought it, the better, but well done. That's pretty crazy. There we go. More subscribers. Copper. Copper's still at 1,000, is it not? We just looked at it. We've been looking at copper. I'm pretty sure it's just at 1,000. NASDAQ versus gold. We could look at that. Okay, copper actually broke out more too. Interesting. Why today? Do we have any conspiracy theories? Do we have any fundamental analysis? You guys know that's not my jam. I don't follow that too closely either. Do we have anything? Any reason that copper is breaking out? I mean, copper, the chart, really we can say the charts are both looking for breakouts. Like copper has broken its all-time high and it's just been trending up, right? Friday, October 3rd, got a beautiful candle, brought us up to that 1,000 mark. We chilled there. And this is what I'm thinking though. It's like until today, and then today it broke out. Silver, kind of similar in that sense. Silver has been very strong, right? But today it broke out. Did anything specifically happen? Anybody know? Bitcoin dominance is moving back up. We can do the gold pairs. Yeah, we can do the gold pairs. Let's do this. Make it copy. When metals rise, yeah, I mean, dollar debasement. So here's another kind of odd thing, though, because, yeah, we can understand that. That's a logical relationship. But weirdly, I don't want to say the dollar is strong. I don't want to say the dollar is, like, doing great. But the dollar has had 3 back-to-back green days now. You know, like, if we were down here, if it was September 17th, if it was Wednesday, it'd be like, yeah, man, no, of course. Like, that's why, you know, we can point to this and say number go down, so number go up. But at least in the shorter term, the dollar's trending up. So I want to find something a little bit more, a little tighter, you know, something like a little more directly correlated or closely, I don't know, like in the shorter term correlated. Let me see. How many SPX does it take to buy gold? Let's do SPX divided by gold. There we go. That is spicy. I know we've looked at this before because you can even tell we have markings on here. The highest point, S&P 500 was the strongest against gold in 2000. It actually never returned to that peak. In 2021, it made it about halfway to 618, of course. Of course, to 618. And now is looking pretty weak, doesn't it? This is looking pretty weak. Almost certainly coming into play with that trend line for S&P versus gold. That is not what you want to see. That is not strong. And this is not it's definitely not a comforting fact if you're ever expecting the S&P to outperform gold. Like in 2000, it was at its all-time high and it never went back. 2011 hit its low. 2017 it hit a high, pulled back. 2021 a little bit higher, but it's pulled back again. Like it's not making progress from a chart point of view. It's not making progress to the upside. If anything, this looks like it wants to roll over and come retest some of these lows. I have no idea what that means. Suey is good. Is that true? Bolts were good in 21. They were. They haven't been good yet. Hopefully they will. Copper goes up like 2/3. The economy will struggle. So DCA, that's what I've been also saying is I'm no expert here on this. Metals aren't, my focus. But there are problems with copper, silver, and gold going up. There are fundamental economic problems. We use those things. We use them to build the things that we need. We use them in electronics, this stuff that literally everything is based on. When they go up, that is not good. Not good for electronics. The cost of electronics has to scale with them. The implications of that are far-reaching, and I'm not even gonna pretend on them. I'm still kind of just waking up from this. This morning. On top of copper itself, copper is in so much construction. These things going up is fun, and we die dollar, whatever. That's what we want. We like this. That's why we're here. But they have implications. It's not as simple as, I don't know. That's something maybe I've even argued about Bitcoin being good as a store of value is it's not used for something. It doesn't have a literal value of service, right? I think I've made the comparison of oil or something. Oil, you could say it's a store of value, but it has a use, and that use has a value. And so when it's over, it's the value of oil is over its actual production value, it should have pressure downwards, right? It should try to get back to that literal value. And Bitcoin doesn't have that. If Bitcoin goes up, it probably means that currencies are cooked, but it doesn't drive up the cost of goods in that way, specifically for a service or for manufacturing or for construction or something like that. It's not tied to that literal value. And I think that is actually a positive thing. I think it's a positive thing. That's my take. Well, man, I actually have to take Beans to the vet. I have to take Professor Beans to the vet. She's okay, but she has to do a checkup every, I don't even know now, but a lot. And it's Thursday. I'm not usually streaming, but I have to do that. I guess all we're going to miss is freaking... I could leave the stream up. I don't know, I just started doing that. I guess I could leave the stream up. But, meh. You can just Google this. Just Community Bank Conference. Powell absolutely rugged us. We're not going to let him forget that. I'm so bummed, though. I thought that was going to be spicy as hell. We do have the FOMC at the end of the month. October 29th, 28th, 29th. Last Wednesday of the month. Almost certainly getting another interest rate cut. I can't believe Powell rugged us today. There was so much to be said today. He didn't say anything. He might have even sent us an AI Powell. We'll see. We'll see. I do appreciate you all tuning in, though, and being here. We got to witness history. This has been a productive and amazing stream, literally just because of silver. And I'm glad that we all got to witness it together. History in the making. Certainly signals some strange waters ahead. We'll navigate it together here on this channel. We are live Monday, Wednesday, and Friday. In between often. We've been live for almost 7 years. 6.5 years here on YouTube. So make sure you subscribe. Join the Discord. Discord.gg/TomCrown. Jump in there. If you're looking for an exchange to trade on, check out our exchange partner, BYD-Fi. Links in the video description below, pinned at the top of the chat. You will get juicy deposit bonuses. They have all the options, all the pairs, everything you need in the trading for crypto. No KYC, and best of all, if you sign up using my link, not only will you support the channel, but I will advocate on your behalf if you ever have issues with them. If anything weird ever happens, anything fishy, come to me. Come to the Discord, just open a ticket, and I will go to bat for you. I'll make sure that you're treated fairly if you are used under my link. So that's the best value anybody can give you in crypto. So sign up. I love you guys. We'll probably be live tomorrow. We'll see. TBD. Probably. We'll see. It's exciting. But I appreciate you tuning in. We'll be live Monday at the latest. You're all the best. Stay